talk about options specifically, we have to kind of talk about the broader market. You look at the S&P 500, that's still holding near record highs, down today here. But you're talking about an S&P 500 that doesn't seem to want to really correct.
It is pretty amazing. The big obsession right now is the fact that this index has not made a 5% pullback since November of last year. So the question is, will the rally continue, or is it complacency? I would argue these situations can go a lot farther, a lot longer than other people think, that we may not see a pullback for quite some time. However, if and when it does come, and it will come at some point, it could be much more severe than just 5% the longer it goes. To talk more about this from the option standpoint, let's bring in Alan Nuckman of BullseyeOption.com. Great to have you with us as always, Alan. And what are your thoughts here? Because you have been correctly bullish for most of the time over the last year, or even several years, with the exception of a few corrections and quick bear markets in between. But what do you think here? Are we do that 5% pullback, and will it be just that, or could it turn into something more, only because it's been such a long time since we've had any real corrective action?
Well, anything can happen. I've been bullish for a long time for a number of reasons, and we get these periodic pullbacks, but it's important to see how the markets react after you get the pullback. So I don't know, and nobody knows when this type of pullback could happen, but if you look at the markets, I let the markets tell me, right now the VIX is not complacent at all. The VIX is at 18 and is significantly above the lows of the year back in June 29th. Now let's remember, that's been a number of weeks ago, and the S&P's made 25 new all-time highs since that VIX low. Plus, if you look at the VIX chart, since that 2020 top, it's been straight down, but not only straight down, but it's been lower highs each and every time we've seen a little VIX explosion spike. So the market doesn't seem to be pricing in any imminent threat. And again, your fundamentals are so solid with low interest rates and companies making money. That's what drives this market. Well,
it's interesting you should mention interest rates, because if rates are to rise, if they do start to back up at some point, and we do, of course, have the 10-year yield well off of the recent 1.12 lows, that could be a pressure on stocks. But, that VIX, super interesting, Alan. You're mentioning that the 17, 18 level is not complacent, and it certainly isn't compared to a few years ago when it was closer to 10, and way back in the day, anything close to 20, which is, sort of where it's at this time, signals some sort of hesitancy or caution on the part of traders. What about the VIX curve? It's not super steep. It goes up to, I think, 22 or so.
Right. It's just kind of buying insurance, and that's why people use the options markets, is they buy themselves some protection. And 20, when I was a young trader, used to be an important pivot, and it's kind of come back into place. Again, we were below 10 back in January 2018. So I still think there's more downside in the VIX, more upside in stocks. And you talked about the psychology, which is very important. A lot of people have been trying to pick this top for weeks and weeks and months, and markets can extend a lot longer than what you think. We've got earnings season starting here in a month, and that's going to, again, remind us of exactly how well they're doing, and that's what drives the market, is the revenue versus the stock price.
Yeah, it's so important to remember that these sorts of situations can really go much longer and further than many people would ever think. So perhaps we will see this melt up continue right into the more volatile fall. Speaking of falling, though, Walgreens over the last several years is down in a pretty serious way. I think from its 2015 peak, about 50%. You like this stock as an option play?
Yeah, as an option play and as a leverage play. This is a Dow dog in the biggest way. This stock is down 50% since its highs in 2015, and the Dow's up 200% since that time. So at some point, Walgreens could get healthy again. It was a $100 stock at one point, and the PE, and I'm not a big fundamental guy, the PE on this stock is 10. So it's very cheap in relative terms to everything else. So I'm looking at an options play, my good old stock substitution strategy, where I buy an option, an in-the-money call option. Instead of buying the stock, it ties up less money, and it gives you a better payoff.
Alan Nuckman of BullseyeOption.com. Thank you, as always, for joining us for Options Insight today. And Taylor, back to you.
Thank you, as always, Abigail. In the meantime, let's get a check on some of the business flash headlines that we're following at this hour. And as we've been reporting all day, the world's largest interdealer broker is slamming the idea of working from home. The CEO of TP ICAP, Nicholas Bertou, saying that the firm needs to keep its clients to work more from the office, and they need to take more risk positions. TP ICAP's brokers have been told to come back to the office full time in places where it's safe to do so.